Welcome to the Stock Talk, where I talk about numerous investment opportunities. In this video, I'll be going over Fundrise. I'll be giving a formal review. So Fundrise is an online platform that allows you to buy real estate property from your house. Now, if you are interested in real estate or you just want to get your feet wet, check out this video and tell me what you think. Let's get to it. So this is Fundrise. This is the official site. Let me jump straight into it from just the beginning. So in order to invest in Fundrise, you have to have a minimum of $500, which is for a real estate property. It's really not that expensive. It's the lowest you're going to get. They have 3 different plans. They have the supplementary income, where they pay you through dividends each quarter. So that's where most of the money that you will receive would be coming from dividends. They tell you the total return. I'll get you all back to all that stuff a little later. They have balanced investing, which is they give you half of it is from income and half is from appreciation. And then they have the long-term growth. So that's currently which my portfolio consists of, which most of your gains would be from like the appreciation. But you do occasionally, get dividends, but it's not as much. And this is a projection of the time and what your returns would be. This is projections. So if you click on supplementary income, this is assuming at $10,000, click on 5 years, and they showing you your projected annual return would be between 8.7 and 10.3%. Same thing for if you go into long term and you put it at 5 years. So for long term, so a lot of the big returns you'll see a little towards the end, because you're talking about a lot of it's coming from appreciation, and a smaller amount is coming from dividend. And if you look at for 5 years at $10,000, by the end of 5 years, you roughly, according to their projections, would be at $15,840, which is definitely good. Another thing I want to say about this is, if you are heavily in the stock market and you're looking for some type of diversification, and you're looking for something that's not directly correlated with the stock market, this could be a potential opportunity. I will definitely go over the pros and cons, so if you know if it's for you or not. Before I jump into any further, I want to let you know that this is catered towards a long-term investment. So if you needed the money within 5 years, I definitely would not recommend it, because one of the downsides about this platform is the lack of liquidity. So if you wanted to get the money within 5 years, because you gotta remember you're actually investing money into the actual property itself, it's hard to be able to offer all the shareholders if they wanted to potentially liquidate at the same time. It would be hard for them to do it. So it is a possible way, but it's not guaranteed. So that's something to definitely keep in mind. And it shows you the historical returns from 2014 to 2018. Let me make sure you can see it. So from 2014, about 12%, 2015, 12%, 2016, 8%, close to 9%, 2017, 11.44%, and 2018, 9.11%. So if you, let me go to, and this is actually what's the properties that they have inside of my own personal portfolio. So they have, a lot of this, let me kind of not go too fast. If they have REITs, so it's real estate investment trust funds, where they take a large pool of money from multiple investors, and then they pick certain properties that they want to invest in. So this is actually how it actually works, and they're just breaking down the different categories in houses that the Fundrise platform will offer. And as of now, they have 164 active projects from all over the United States, Las Vegas, Los Angeles, Brentwood, Maryland. They have a few in DC. And the thing about it is, for each one, they tell you what their projected returns would be, what they're projecting it to be, the risk management they created. I'll make sure. I don't know if you can see that, but I'll come back to that later. They have the stabilized, actually let me click this. So this is a apartment that they plan on stabilizing. This is the amount of money they committed to it. And let's review details. And a good thing about this is they do give you pictures. If you live in the area, you can actually go out and visit these sites. This is the map of where it is located. And let me go back to the and this was the market analysis. This is why they kind of tell you, if you want to click on that, exactly why they targeted this specific area, which is a plus. I like that. And they also give you a timeline of when they acquired it, the updates of as of January 22nd, 2020, where they the status of the project. Go to the next one, and this shows I think the main target areas where I see a lot of that properties is Washington DC and Los Angeles. It must have a lot of potential for potential growth. They even show you their investment strategies and how they went about choosing these projects. These are some of the actual locations and properties that I acquired in my portfolio. They have single family, commercial, residents, all that stuff. And if you want to see this single home right here, they show you how much money they committed to it, the projected annual returns, and so that's what you can expect when you are looking into Fundrise. Another one of the thing I wanted to bring to your attention is they have different regions that you can choose from, and if you wanted to select a specific region, let's just say East Coast, you can add money to this specific region, so that way it gives you a little bit more flexibility. If you wanted to add more money, you can select which location that you would want to put your money into. And let's get into the most excited. Let's get into the most exciting part. When I got it, and what can you expect? So I got it on May 2018. This was the initial investment of $1,000. Now up until this date. So as of now, the net return is $126.17. Once again, I mentioned it's for long-term growth. It shows the advisory fees and the dividend, how much I got from dividend, and how much I got from appreciation. I do want to let you know that there is a 1% advisory fee, and this is factored into it. And I want to let you know that for your returns that they show you, that's after fees. And another thing I want to tell you is that this will be taxed as income tax, which is a little higher than capital gains. So this would definitely be something you want to consider a factor into if you were thinking about pursuing or looking into Fundrise. Yep, so it gives you that nice little line right there. And they even show you the recent properties that they acquired over the time. This one is in Las Vegas. This is the favorite part. I'm a big stock fan, so I really want to see this right now. So this is a chart where they compare this Fundrise to the stock market. So you can see in 2014, well, let me highlight. I want to make sure you get this one right. In the blue is Fundrise. In the I'll call this a gray. That's how the stock market's been performing. Now, I want to let you know that the stock market in the past couple of years has been doing really well. But the thing you've noticed, there's a lot more fluctuation. But if you look at Fundrise, they do have steady, consistent growth. That's something that I have to give them credit for. However, my concern is when I'm looking, and I'll go down so you can see what I'm looking at. But from the standpoint as it's hard to liquidate it, like get my money as soon as possible, that's something that I have to take into consideration, and that's a huge downside because people do not like the ability that they have their money tied up and there's be a potential where they can't get their money back. Or you gotta remember, this is an investment, so that of course the same risk that applies, you can lose money or not. or yet all your money. But even though that may not be likely, I still want to let you know, I have to present all the facts to you that is a possibility. Okay, so this is Fundrise, that's their returns. This is the S&P 500. So over the past, from 2014 to 2019, the 6 years, Fundrise is averaging 10.57%. The market is averaging 11.43%. And Vanguard Real Estate ETF is 10.72%. Now, this is my concern because actually Vanguard Real Estate, that's where you can they also allow you to invest in, different properties. But the price is more directly related to the stock market because you can buy and sell on the open market, which would factor into the price of the price of what the ETF would be. So my thing is, if the Vanguard Real Estate ETF is performing higher than my Fundrise, this is a concern for me because this I can easily, transfer that into cash if I needed to. So that's one concern that I do have about Fundrise. And that year, the annual return was roughly about 9.11%. But this as a whole, you gotta remember, some will be a little bit more, some will be a little bit less, because some are getting a higher dividend. And for long-term growth, the return should be a little bit higher. And let me show you one other thing before I go over the pros and cons. So this is the actual annual returns from 2018, 2019, and 2020, which the year pretty much started. So 2008 was partial. So from May to December, that was a 4.1% return. This is after fees. For 2019, it was 7.8%, and for 2020, it was 0.1. That you really can't even look at that yet because the year just started. Now for 2019, I will say I was hoping my returns would be a little higher, but it's just year 2. They tell you within the first or 2 years your returns might have been a little lower, and they should increase over the time period. But relative to the market, they did have 30%. So of course. But you have to think about this. You plan this for the long haul. You plan this for consistency. So as of now, I'm not increasing my position, but I'm just kind of just seeing how it goes each year before I make any more. But here's the pros and the cons. Let me start off with the cons. Lack of liquidity. It's hard if you wanted to get your money all out at one time. That may cause a couple problems. 2, that the annual fees is 1%. Some people may consider that a little high. And 3, the interest that you would incur would count as income tax. Some people might not consider that a big thing, but I know I do. Now the pros. It allows you to have a lot of diversification. It's not correlated with the stock market. This is something you can use to get exposure to real estate. It's a way you can get passive income from the dividend. And it's low cost, $500 to start, actually obtaining a real estate portfolio is relatively low. Now, if you have any questions, comments, or anything, just drop it in the comment below, and I'll make sure I get back to you. That concludes Dow Stock Talk. I hope you really enjoyed what you've seen. If you did, hit the like button below, and if you really enjoyed this video, please subscribe to my channel.